Today, we are going to discuss about some important points to understand before getting into stock market. Yes, the first point is stock market is a gambling. See, when you talk to your friends or some people in the society about stock market, suddenly they will say that, oh, stock market, it's very dangerous. It's a gambling. It's not gambling. Let me explain clearly. Some few years back, almost a decades back, without knowing anything about stock market, I had some money. I started investing it. Okay, let me also do trading. I want to make money. That time, Syntax company was in the top Nifty 50, in the Nifty 50 in the index. It was trading at 54 rupees. So generally, that time and all, if you want to be a good trader in stock market, you should know Indian economy, world economy. You should read this Economic Times paper. I will buy every day. I don't know what to understand from that. So I started doing my own way. Yeah, what happened? That time I got a news that Syntax company is going to invest, buy another company. I don't know which company it was. It was almost a decades back. The company is worth of $1,500 million. 25% they have paid the amount in hand. 75% it's a bank loan. People kindly understand here. 25% is they have paid it, and the balance 75% is bank loan. So immediately what we will think, as a beginner, we don't know what is right, what is the correct. We won't see the other side. We always believe in what we know. I thought, okay, Syntax is going to buy another company which is $1,500 million. So definitely this company is growing. That's why they have money. So it's good time to buy Syntax share. It was trading at 54. I bought 1,000 shares. That time I had money. I bought 1,000 shares at 54. And slowly after this news, and the price started falling. It came to 52. Okay, I know stock market, the price will fluctuate. Let us wait. It came to 49. It came to 48. I swear it came to 44, 10 rupees less. And I could not bear that. Almost 10,000 rupees loss. I sold it and it came out. 10,000 rupees loss for me. And still, I don't know where I'm going wrong. See, this company is doing good. They are doing good business, and their dividend is good every year. Year on year, the dividend which they give to the shareholders was good. And they have bought a foreign company for $1,500 million. And still, why the shares is going down? And finally, I also started blaming like others. Oh, stock market is a gambling. Yes, people what they said is right. I have burned my hands. All this, and then I left trading for some days. Suddenly one time, one of my friend is a big shot. He said, "No, I'm going to meet my auditor. If you are free, you just come with me." And I too went along with him. And he was discussing about some accounts and investments, all those things. And suddenly I asked my friend, "I have a question. Shall I ask him?" He said, "Okay, no, not an issue. You can ask him." I asked him, said about this Syntax. Said this what I told him what has happened. And that stock, he's a CA, chartered accountant. He said, "Naren, you are wrong. If I was there, I would have also sold that stock. I won't hold it." And he asked me how he bought that company. I said 25% cash, 75% as bank loan. Naren, repeat again. 25% cash, 75% bank loan. Do you understand now? Till that moment, even I couldn't understand. He said very clearly, Naren, he paid 25% as a cash or check or something like that. Balance 75% as a bank loan. See, if he is going for a bank loan, he won't give dividend. So every year he will get profit, but he cannot give dividend. That is the reason every investors they've sold it, and without knowing this knowledge, I have bought that share. So knowledge is very important. There is a probe. A person empty his purse and put it in his brain, no one can take it from him. If you have knowledge, you won't have fear, and you won't blame that market is a gambling or something like that. So this is a very good lesson I've learned from this. So we should clearly do our study and research analysis. See, my video is for not business purpose. It's for education and research. You understand this, you get ideas from different angle, you do your own study and research. I may be wrong. See, this is my video, what I have observed according to my knowledge and strength. Then I have come to a clear mind. See, once you have been clear, then you should not doubt it. Okay, market is correct. And slowly there is a, we all know that when we get into stock market, there is one common name, Munishiya Homa. He is a rice trader in Japanese who lived some centuries back. He has a strategy. He always say that market is always right. So suddenly when there is a sudden rise in the price, automatically it will consolidate. That we say it's correction. So market is doing correctly, but we have to understand. That's why I said in my previous video, trend is your friend. Once you're able to read the naked chart clearly without any indicator or tools, then you will be a master in that. So now I would like to make clear things that market is not gambling. See, without knowledge, when we get some extra money, we go and invest. Okay, buy that shares, wait for 5 rupees. If it goes 5 rupees, sell. If it goes 10 rupees, 20 rupees, make profit. This is gambling without knowledge, whether the market will go up or down. This is gambling. We are doing gambling. Market is always correct. So we should make it clear that market trend is very important. Nifty, how Nifty is moving, whether Nifty is strong or weak. All together we have to see that, and then we have to, there are a few points before starting trading. We have to keep all these things in the back of the mind. So I would like to make clear that stock market is not a gambling. Second thing, stock market is a primary business or secondary business. Many people, even me had a doubt, how can I make this as a primary business? If I want to make this as a primary business, how much I should invest? All these questions were cracking my head. And finally I have understood that it may be a primary business or a secondary business. It's based upon the investment and the time we give. See, for every individual have their own problem. I may need monthly 15,000 to pay all my bills. Some may need 50,000. Some may need even 1 lakh. So depend upon that, the investment comes. But okay, how much to invest? What will be the ROI, return of investment? If I want, it's all about our bills, how much we need per month. So investment is very important. So initially what I'm trying to say here is, you should always keep this stock market as a secondary business. Once you have become a master in that, and you know, if I invest some 10 lakhs or 5 lakhs, I can monthly make 50,000, 60,000 or 1 lakh, which is enough to pay my bills and run my family. That is the time where you can get into that stock market as a full-time trader. Until then, we cannot decide. It's depend upon every individual. One person may need 2 lakhs and he will make 20,000 per month. That 20,000 is enough for him to pay all the bills and to lead a good life, a balanced life. For some may it's not enough. So it's depend upon the investment and how much we are it's depend upon our expenses per month. If I have a minimum expense of 30,000 and after investing 1 lakh and I'm getting only 15,000 per month, then it's not possible. In that condition, I should keep this as a secondary business and that should be a main source of business for me until you master in that. See, okay, what is the return on investment? Here, this is very, 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 very tough because no one can say that in intraday, I'm doing intraday, every day I'm making 500. That is not at all possible according to my knowledge. There are people who are telling that, see, if the market is in one direction, you may be, I cannot guarantee you may be, but market in one direction, either in uptrend or in downtrend, but market is in sideways and it's very difficult. So at one time, people will be making money and suddenly one time they will start losing money in that. That's very important. So the return on investment is always, I can say, is I have a very good example. See, your capital is 1 lakh. My 1% rule. In my previous video, I have told this 1% rule. See, 1% of your capital is 1,000. You have taken 10 tradings, either intraday or swing trading. After 10 trades, 5 trade is loss and 5 trade gives you profit. Here, this 1% rule is the the main motto of this rule is keep your profit unlimited, but keep your stop restricted, not even more than 1%. See now, 5 trade lots. So out of 1% is 1000. For 5 trade, you have lost 5000. Out of 10 trade, 5 trade is loss. So you have lost 5000. Next, 5 trade profit. In an average, see if you lose 1%. If you get profit 3%, 2%, 5%, 8%, depend upon that. On an average of 8 or including 8 trade, I'm keeping as 8%. So 8% is 8000. In overall, if you see, still after losing 5000, you are in profit of 3000. Okay, now I'll come to the return on investment. For example, you have 1 lakh in your hand. You kept in you invested in the fixed deposit. See, if you invest in fixed deposit, after 1 year you hardly get 7 or 8%. 7% or 8% maximum. If it is a rural or urban, wherever you invest, they won't give more than 8% nowadays. It's reduced. But if that same thing you are expecting 2% or 3%, say you can keep 2% in a month of 1 lakh, it comes 2000. In 1 year, 12,000, 24,000. It is more profit for you. This is more than better than investing in fixed deposit. See, this is how you should start trading slowly, slowly, slowly. Once you are correct with your concept and with your, if you are going along with the trend and you know the market movement, what is going to happen in the next few minutes or few hours or in 1 or 2 days. Depend upon that, you can increase your volume and you can make good money. See, this is very important. This 1% rule is very, very, very important. To know more about this, I have explained in the previous video. Even when people are asking me to make it a separate video for this 1%, make it more clear to understand, that I will do later. So this is very important. So initially what I'm trying to say here, let me come to a conclusion. Initially, to start trading in a stock market, keep it as a secondary business. If you buy gold for 1 lakh, in a year you will get 8% profit. It will rise 8%. If you put in fixed deposit, 7%. If you put it in land, it's maximum 12%. See, land I cannot tell you, because if you want to buy, it will be a higher rate. But if you want to sell, you won't get the good rate. Gold is better. Instead of investing in commodity, you can invest in instead of investing in papers, you can physically get gold. Okay, that's different. But in stock market, if you keep at least 3% per month of 1 lakh, 1 trade or 2 trade, successful trade, if you get 3%, finish. In 1 year, 12 3s are 36%. You will get extra 36,000. And if you do this for another 5 to 10 years, it will get compound. In this 5 to 10 years, your knowledge will go extraordinary. At one point of time, your mind will say, your knowledge will say, oh, it's a good time to invest and start the business. That time you will get into full time. And if you have 5 lakhs or so, you can make 20, 30. That is not a big deal. So this is much more important. And main thing is, we have seen in many TVs and many media giving ad that you can trade in commodity, you can trade in F&O, you can trade in options. Dear friend, I'll tell you this is much important thing. That is, before going into F&O, who can trade in F&O? Anyone can trade in F&O, but before trading into F&O, we should know what is hedging. Hedging is by averaging your loss. Hedging is minimizing your loss. That is the right word, minimizing your loss. See, big players, they don't directly go and trade in future and options. Why they introduced future and options? There was equity market. You can buy shares in unlimited. You can do intraday. You can do carry forward. When this is more comfortable, and why they want to bring this contract trading, which is only valid for 3 months, 1 month, 2 months, maximum 3 months. In that future, and another thing is option, which is traded in the premium. Why? Because to keep all the investors' money safe. This is, again I'm telling you, this is my observation. Maybe I may be wrong, but get this information and you do your own study and analysis. See, future is a contract basis. You can maximum hold the contract for 3 months. After that, it will get expired. If you are in profit, then it's good. If you are in loss, then your money is gone. You are bankrupt. See, why they introduced this future and option is the investors, they would have already bought some companies XYZ company shares, say Axis Bank. I oftenly trade in Axis Bank. They would have bought some 1 lakh shares, to then 2 lakh shares or 10 lakh shares or even more than that. That institutional buyers and the non-institutional buyers, we all know this. They would have bought huge money at the time of IPO or after IPO when the stock market get into the retail market. When the Axis Bank stock get into the retail market, they will buy these shares. At the time they may have bought in the face value, or after getting into the retail market in 1995 or something, that time it will be 5 rupees, 10 rupees, they would have invested some money. Now that company shares is almost 1,500 and 2,000, it's trading near that area. In these many years, how would have they booked the profit? See, from 5 rupees to it came to 2,000 rupees means 1,995 rupees the profit. They have to book the profit. How will they book the profit? If they okay, they can book the profit by selling their shares. Okay, one institutional buyers or a non-institutional buyers, they are holding 1 lakh shares. They bought it at the face value of 5 rupees or 2 rupees somewhere. Now the company shares is 2,000. They have sold 1 lakh shares and they made a huge profit. They can again buy that Axis Bank share at 5 rupees. No, they cannot buy the share at 5 rupees. So here the future and options get into the picture. See, he holds 1 lakh shares. Now the price is gradually growing. Whenever they see there, we can see that is called corrections. They will book the profit. They will go and short in the future to book the profit. The difference, they have to take the profit. Year on year, dividend is different. That is different. Here they have to book the profit. They will go, either they will buy the stock in the future and they will book the profit, or they will go short to book the profit. So, for this they use the future trading, but without any holding equity shares, we directly jump into and we do trading in future. If yes, suppose he went short on that big people went short on Axis Bank. It is 1,900. They went short on Axis Bank. Suddenly the price went up. They will have a minimum loss. Okay, at the same time here in equity, their profit is getting up. So that what I'm trying to say is there is no loss for them, for big people. Already equity, when the equities grows, they will close that fund and come. For that only they are trading in the option in premium. It's like taking, when they invest huge money in the future, for that they are taking insurance for that money. If that money falls, this premium will give them. Now you would have understand clearly why this F&O is introduced into the market. Keeping all in this mind, now you have to practice your way of trading. So don't expect big in this. Just start trading slowly. At one point of time, your knowledge, your subconscious mind will say, hey, it's a good time to start your own business, get into big investment. That time you will be doing a good business, you will be a successful trader, no doubt in that. Thank you. And in next video I will discuss about this corrections. In corrections only we can understand about the support and resistance. That is also very important, very interesting. Have a good day. Bye.